Bitcoin hit the pre-halving target of $42,200. So how much time is left in crypto before we see a reversal? This video, let's have a look at where crypto sits, where Bitcoin sits, and some of the massive moves that we are seeing around the world in our global stock market. Some of this stuff is a precursor to the mega gains that we're going to see in the stock markets. At least that is what the cycle has been telling us. That is what the 18.6-year cycle has been saying to us for many, many months now. So hopefully you've been following along by, you know the deal, hitting the like and subscribe button. I did ask for it yesterday and you guys delivered a massive result. Lots and lots of new subscribers yesterday, and we are well on our way to 300,000 before the end of the year. So thank you very much to you guys. All right, link top of the video description, free TIA report that went out yesterday. So check your inboxes if you are on the email list. If not, definitely check that and you should be able to find where that is through our free Discord as well, and the free 7-day trial for the Gann Swing Indicator. All right, guys, let's dive in. Big all-time high prices have been hit for some of the stock markets around the world. We'll get into that in a moment. But as I said in the intro, the real estate cycle is well and truly on track here, with prices going up. I know it sounds crazy. I say it in almost every single video. The reason I do is because it is very hard to understand just how much demand is driving through these markets at these lower prices when all we've heard is how everything is unaffordable, how we should have had a collapse and a recession and housing crashes. And we've saw the old housing crash of 2022, the old housing crash of 2023, and now we're seeing the old housing crash of 2024. But for the US, for Australia, for the UK, we're seeing prices going up. We've had about 9 straight months of up values here for Australia, and the US is around 8 months at the moment. Now, you might ask, what the hell has this all got to do with Bitcoin, stock markets, and cryptos going up? How much time is left? The whole premise here, the theory, is that while land is in a macro bull market, which typically lasts about 14 years before we see a roughly 4-year downturn, you typically see risk on assets doing relatively well. Of course, Bitcoin has its bear markets. It retraces 70, 80, sometimes 90% in the old days, but the lows have been getting higher. I don't know what that's going to look like after this peak. And I want to keep reminding ourselves, because as we get closer to this top for BTC, which is probably a couple of years away, I know many people also have that same vision now, but the calls are going to get ridiculous. And we did see it on yesterday's video where some people are saying charts are useless now. You can throw them out the window because everything is different. There is so many different factors at play here for crypto and Bitcoin, and things are going to be different this cycle. You must know those words by now. If you don't, tattoo this on the front and the back of your hand, depending on which way you like to look at it. This time is different. The most costly words to any investor anywhere ever. And that was said by Sir John Templeton. Okay, so it is never different to a degree that there's just going to be this whole dynamic shift that what came before is just not going to occur. That is the biggest thing I've learned in over 17 years in the markets. There is never a time that is that different that old rules don't apply. The purpose of the old rules is that it keeps us safe in the market. So, with my rant out of the way, I hope that saves you hundreds, thousands, tens of thousands, hundreds of thousands, maybe even millions of dollars, and I hope it makes you even more money as well. We are looking to the upside here, and we are going through this stage here. We're going to get into this, and we have already begun that in Australia, and we've seen it in the UK, the US as well. For you guys that are watching, if you are from the US, give us a little shout out there. You guys can do way better than this. You should be well and truly up on the Aussies subscribing here, and that's my own little shout out to try and get you to subscribe more so. Anyway, looking to this upside, we may have a few more years left of some pretty good times. Now, we're seeing that on the S&P, the NASDAQ, and another massive emerging market, India, the Nifty 50. So we're seeing a lot of risk coming back into the game. This is a new all-time high. We hit a new all-time high on the previous session here, or even on Friday of last week, and then Monday just skyrocketed. Tuesday is where we currently sit. The market's still open. It's got about 6 hours to go, but that is just blown away. It doesn't mean it's going to keep going, but in this case, at this rate, it looks like it. But anyway, we can see that there is risk coming in to emerging markets, and emerging markets, they're not exactly like a crypto market, but you could almost say that people are looking for a higher beta play, so a higher risk appetite now, and they are attempting to play their hand at an emerging market like India, which is now going to all-time highs. There's going to be a plethora of fundamental factors as to why this is happening. That's okay. We just want to focus on the charts so that we don't get swept away with a whole lot of noise, because the chart is essentially telling us what we need to know, and that there is a lot of demand coming in here, prices are rising, and people have an appetite for risk. That is a fantastic thing for Bitcoin and crypto, for those prices to also go up. Now, S&P 500 is still hovering at these previous high levels of July. So essentially all of that fear that lasted 3 months from the July peak to the October bottom has been wiped away, and the market is just waiting to see what happens from this point forward. It's had 1, 2, 3, 4, 5 weeks up. Eventually, we've got to get some sort of correction, but right now it's still not saying that we need a correction. We just got to go with the trend. Market is up, it's broken through 2 of these swing tops, and it's waiting to get to that next one. Now, I've got this particular chart up here of our 4-year cycle because I'm looking at the areas that the S&P 500 broke to a new all-time high within the Bitcoin accumulation period. Now, I'm just labeling the accumulation period as anything underneath the old all-time high price for Bitcoin so that we can have a clear, measurable line to understand what this chart is showing us. And in the past, Bitcoin, the accumulation zone, so this was the time when Bitcoin was underneath its old all-time high throughout 2018, 19, 20, and then it broke out into 2021. You could see that the S&P 500 broke out to a new all-time high once. I think this looks a little better on the monthly chart here. Broke out once here, little pullback, broke out again. I'm looking at more so right there. It broke out in October 2019 because that's when it went on to a new fresh run, collapsed, and then it also broke out again towards the end of the year, just before Bitcoin broke out into its first all-time high. The previous cycle broke out, had a little peak, dropped off again, broke out for a second time, and then Bitcoin broke out to its own all-time high. So the S&P hit essentially two fresh times that it hit an all-time high, and then Bitcoin broke out. Again, that's telling us that risk is here. The traders and investors want to start getting into riskier plays. Whether you like it or not, maybe you're Michael Saylor watching this, maybe you're not. Bitcoin is still a risky play, just looking at traditional finance. And we have to respect that because the majority of the money is in traditional finance. We're waiting for these Bitcoin spot ETFs for more of that traditional money to come through. So we have to respect that, although many of us think Bitcoin is the be all and end all. Talking to you, Mr. Saylor. Going up here to the previous cycle, Bitcoin accumulation, it broke out in 2012 and then again in late 2012. These were the areas just below the previous all-time high, but you have to remember this was the global financial crisis top, and the market basically recovered from that point. Bitcoin was born out of the GFC, and here we are, the S&P 500 broke to a fresh high, and then Bitcoin was on its path to its first major bull market in 2013 there. So new fresh highs here, new all-time highs, new all-time highs. It looks like, no guarantees in the market, but it looks like we're on track for a new all-time high here for the S&P 500 as well. Doesn't look like it'll come in 2023 as we have about 3 weeks left, but early 2024, first half, let's see what happens through that period. NASDAQ, same sort of thing here. And you may recall you had some pro traders and professional investors and whatnot trying to convince us that this market was in a complacency period of a bounce here before it was going to collapse like it did in the dot-com collapse. Needless to say, that analysis was completely off track. We can see now that we have been going through this sort of stage here, and the main reason I bring this up is that these charts aren't meant to replicate an exact looking pattern. in the traditional markets. They're here as a guide to let us know about the emotions, the psychology of a market. It does not have to look like this, like we're in primary school and expecting an exact pattern repeat like that. Now, of course, for crypto, it looks pretty similar. But in terms of the traditional markets, if we think that, then of course, we're just going to be led astray and essentially be thinking that this market is about to collapse like a dot-com bust, when in fact, it looks like we've gone through all of these emotions here. Complacency was probably somewhere at the top. Then we had a bit of an anxiety drop, a bounce, a bit of denial and panic, and then a bounce. And we had another bounce here, and then into that final little anger stage here at the bottom, where many were basically saying the market had to be over. But of course, we have now recovered from that point, and we are, or at least the NASDAQ is sitting roughly 6% away from a new all-time high. What has hit a new all-time high? India. We covered that earlier. Massive, massive gains there. And another thing is the top 50 stocks in Europe are now less than 2% away from a new all-time high as well. The top 50 in Europe. Your biggest players there are the UK, which is your Z1 here, your Germany, France. They are your biggest players there. And Germany, if you recall, right here, back just a few months ago, hit a new fresh all-time high when they were in a technical recession. Yes, the market fell a little bit here. Let's have a look at it in terms of a percentage. There's your all-time high down to the low here, 11% in a technical recession. The market is now less than 1% away from another new all-time high. Let's get that through our heads and not worry about any of these recession calls, because they are coming back. They'll come back next year for 2024. They'll tell us that the markets have to collapse. And essentially, we just need to follow the charts. Maybe we're not always going to be this spot on with the markets themselves, but as long as we follow the charts, hopefully we can be on the right side more often than we are on the wrong side. The markets are saying markets want to go up. And if you had a shot for every time I said markets, you'd probably be absolutely pissed by now. Okay, on to the Fear and Greed Index for Bitcoin. These levels have not been seen since the all-time high. 75 is the reading now on the Fear and Greed Index. And I think if we tip over just a little bit further, we'll hit the extreme greed. Now we take it back to the previous all-time high of November 2021, which is right here. You can see that where we currently sit at 75, there are those levels right there. We have not seen these since the old all-time high. You can definitely say that the greed is well and truly here as we hit that halving target. We hit the $42,000. So from this point, I think time is obviously running out for this move up. And yes, I did see some comments from people saying you're a fool if you think this is the end of the move. No, we have to respect the charts. The charts are up. But if we're getting on late to these moves, which I suspect there are probably quite a few people getting on late to this, we've been talking about buying up at the lows. We've been talking about buying up during these periods. You don't have to get the exact low, just within the vicinity of that move there. That was the reaccumulation. And then at these levels here, looking back to 25,000 down to 15,000, this was an area that I talked about so often on the channel as most likely being the low. So at the time, you never know until you get the breakout like we did in March. But it seemed like this was a good place for a low to form. Here is a reaccumulation and there is a breakout. So it's been a long time since that bottom. It's been over 12 months now. And since the June collapse, that's been well and truly over 15, 16, 17 months, coming up to 18 months now. So respecting the psychology of the market here that we're getting into the greed, it's probably likely that we'll see some sort of reversal. Now, the juicy part of looking at these reversals, we're up 3 months, and like we covered in yesterday's video, so if you haven't seen that, definitely go back and check that one out. But like we covered in yesterday's video, some of these moves can go up for quite a considerable amount of time. We're at 3 months, and typically that's all we've seen in this move to the upside so far. But in previous bull markets, there's been 6 months, 5 months, 5 months, a little 2 month here as well. 3 months, 7 months, 10 months, 5 months. So it's not uncommon for this to continue on. So if 3 months is the max and we hit out at 50% here at $42,000, so be it. If that is the case, the downside, what are we looking for in terms of time? Is this over? Probably something like I've got in the title. When can we expect a correction? Well, we've got to look at those price points and those time targets. But in terms of the time to the downside, I probably wouldn't be looking at anything too severe. And what do I mean by that? Well, look at the previous cycles. While you're in a bull market, the corrections have been 1 month, 1 month, 2 months. This says 0 because you had a top and a bottom within the same month, and then the market powered away from that point. So it wasn't a full month, it was less than a month. You had 1 month here, and then the next cycle you had 6, but we'll get to that later. 1, 1, 2, and that was it. And so far, all we have seen is 1 month, 2 months, and 2 months. Now, it could go for longer, but if we just look at a guide here, typically we see 1 to 2 months of a reversal in a bull market. Now, of course, you have to understand that this is a bull market, and if you don't think it is a bull market and this is just pretty much a rally like some people on Twitter, they think that the market's going to collapse again, well, then you're probably looking at this as a bear market rally. But I think most of us have now covered off that this is not a bear market rally, and we're finally into those early stages of the bull market, and the game now begins of how long can you hold out and wait for that reversal before you get FOMO and just jump into the markets. Once we can get a confirmed top, and then we can look to the downside. I've said that there, we're looking at roughly 1 to 2 months to the downside based on what we've seen in the past. Now, just to cover off this 6-month move to the downside, remember, this move was 6 months up, it was straight up, and it was about 330% to the upside. We have not seen that this time. We have had a nice, clean rise and correction to balance out the move to the upside. The moves to the upside have been digested relatively well by the market, and then when it's ready, it goes on. And when it's ready, the time it usually takes is roughly that sort of 1 to 2 months before it's ready to move on and test some more time to the upside. So with that in mind and those price targets, we're looking, I think, somewhere towards this month. So maybe this is the peak month. We still have just over 3 weeks to go. Maybe January, which would take us into that 4th month, which would make it look more like the previous cycles where the market has done more than 3 months to the upside. You've got 10, 7, 3, and 5. But I am keeping an open mind to the possibility that December is that peak month. We'll know towards the end, but essentially let's have a look at where that price hits and then what the market does from that point. And then what I'm saying is there is likely time from that point, because the next thing that a lot of us get ruined with are the influencers telling us to buy the dip. Now, if we take a look at these dips, you had a month to buy this dip before the market powered away to one of the most powerful bull markets of all time. You had basically a month. It doesn't need to happen on the second day that the market's down. There was a month there. In this case, you had 2 months. That was a COVID crash, okay? But you still had a fair bit of time if we're looking at that rather than just looking at the price drop itself in a percentage. We've seen 1 month so far, 2 months, 2 months. Previously, 2 months. And even here, you still had a couple of weeks to get in before the market powered away to that next move. So if and when we do get this correction, just know that you do have some time to position yourself, and it's not about trying to get FOMO into the market and set yourself up because the market's about to take off to a new all-time high. It's highly unlikely, just based on what we've seen previously, that the market will just shoot up to a new all-time high. We have hit our 50% level. We got to our $42,000 before the halving. That's what we've been talking about for months on end here at the channel, just based on what happened in previous cycles where the market has hit the 50% level before the halving, hit it again, correction, and then finally breaking out of that 50% level. Did it last time as well. And that happened 22 months in each of those times. So you still had a bit of time left before the market really took off into that powerful manic stage. And so I brought up these earlier as well, just so you can see that, well, the S&P still hasn't reached a new all-time high yet. Doesn't necessarily mean that it has to happen. So meaning that S&P must reach all-time high before Bitcoin can. But what I've noted is that you want to see more risk come into these markets where people are a little bit more easygoing with their money and investments because they're all trying to chase the next pump. And then that gives us the all-time high move for BTC. So I suspect after we get this current move, whenever this move ends, we're looking at that time frame of potentially this month or next month, January. I would be looking for a correction from that point within the bull market. Now, if this is it, we've hit the 50% level, the top is in, the market doesn't go any further from there, let's have a look at some corrections, and we'll go back to some previous resistance levels that might become support. So if we do that to the previous tops at roughly $32,000, you can see it's about 25 to 26% decline from the current top. That's only the current top. This market could run a little bit further, remember. So that's still a pretty reasonable decline for BTC, and it would be the biggest percentage drop that it's had this entire move up. But remember, this has been a pretty significant move to the upside. So that's not such a bad place to look for a move. But if Bitcoin happened to go just to this 48K level, which is the monthly lower swing top, a very key level as well for the market, if it gets there this time, maybe it has to happen on the next move, the next test to the upside. But anyway, that's a roughly 15% move from that $48,000 back down. We can see to the 50% levels, about 13%. You'd probably think that the market would probably do a little more than that. Of course, this is just a bit of a guessing game from this point because we don't have a top in yet. And I'd only say that because these other 1, 2, 3 moves were roughly 20 to 22%. I'd say we'd probably come down a little bit further and that we haven't digested that move on the way up like we did in the previous ones. So I'd potentially expect a slightly bigger decline over the course of months leading into that halving. So maybe we get a peak in January-ish, get a pullback February, March, halving happens in April, we get a turnaround in March, and the market starts to push higher in late March into April, into that halving, and pushes us to that new all-time high as well. If that's the case, well, we can look down somewhere to those previous tops again. 33, 34% all looks pretty reasonable. Again, I just want to make a very big warning that the market has not got to that point yet, but everything still looks within reason if that was to happen. Another reason why I like that move down in that sort of maybe February or March area is that we've seen that in the past. February was a peak here. March was a very scary bottom for the majority of the market, a very, very scary bottom, and it's happened many times before. The year before here in 2020, COVID crash. We had the banking crisis as well. And we can go back, we've done that on the channel before. March is typically a reasonable time for markets to bottom. And that's quite prevalent on the S&P and the Dow Jones as well. So let's just keep that in mind going into the later half of Q1 of 2024 as a potential area for a low. The idea here is to give us a bit of a roadmap leading into December and January. If we get that top, then that's what I would expect from that area there, potentially a pullback into maybe March area, so somewhere around February, March. As I mentioned, if this market does run up that little bit further, it is going to bring on that FOMO. But like we've seen in the past, once the crypto fear and greed index basically breaks this level of 70, and in particular, if it gets above 80, that is almost a sure recipe for a move to the downside and quite a swift move as well. So it can really scare the market quite quickly because the emotions have gotten over the top to the one extreme and they probably have to come back to the other side as well. Thanks again, guys. Check out the links, top of the video description, 7-day free trial, and also the free TIA report. If you did check your inbox and it's not there, definitely go and check it out on the free Discord. There are some links there as well for you guys. I'll see you at the next video. Hope you're staying well. Until next time, take care and peace out.